Opeyemi Oguntade, analyst from financial derivatives company, gets to us to talk via Skype in Lagos. Opeyemi, good morning to you.
Good morning.
Yeah, okay, fine. Does any of this number get you excited?
Yeah, specifically for the oil prices. I mean, they're increasing of recent, which is surprising considering the supply glut in the market. So, and as well as the agri commodities, cocoa, for instance, has been increasing from the beginning of recent. We're seeing a decline in cocoa prices. So those two specific commodities are pretty exciting.
Okay, do you get excited with crude oil? Are you excited?
Yes, I am.
So what's exciting you about that? June 5 is just around the corner, Friday to be precise, and it looks like crude is getting very rapidly, and the dollar looks a little bit uncertain.
Yeah, well, for the meeting, the OPEC meeting, particularly, I mean, the fact that they're going to have a meeting and most investors are looking to see if they're going to increase production or maintain the same quota. That specifically, it's kind of it's something to look out for. We're trying to see, or we're looking forward to seeing if the supply glut is going to continue, or if they're going to maintain the same quota. And for Iraq as well, I mean, production is increasing significantly. I mean, last month they increased their production, their daily production, as well as the quota for OPEC. Last month, the month of May, was their 12th consecutive month that they produced above their quota. So we'd like to see what their conclusions will be in this meeting, to see if they're going to maintain the same quota or if they're going to reduce it or increase it.
OPEC is likely to do nothing. Do you agree with that?
Yes, I do.
You do. So if OPEC does nothing, keep his fingers crossed, as it were, what happens to oil producers such as Nigeria? Where do we go from here?
Well, for Nigeria, I guess we would have to maintain our current production levels and look at diversifying our exports, because we can't be too dependent on our oil productions, because presently the prices are fluctuating a lot and we can't really tell what the future is for us at this point, because there's a supply glut and then there's a reduction in U.S. crude inventories. So the oil prices are fluctuating a lot. And I think for Nigeria, we need to start looking at other opportunities in other commodities.
Shouldn't we be comfortable with $65 per barrel? That looks like a very good price margin for us, considering what our budget benchmark was.
Well, $65 is pretty low. I mean, that's going to affect our government revenue. And since majority of our export earnings comes from the exportation of crude oil and our reserves as well. So I'll say 65, it's not too comfortable for Nigeria.
And you're not comfortable with that figure as well?
Yes.
Okay, let's finish it off on this note. For agri-commodities, let's get back to Agric. Nigeria is becoming the poster boy for Agric reform, as it were. Do you think there is more that we should do to take advantage of the price levels for agri-commodities at this point in time?
Yes, we should take advantage of it. I mean, specifically palm oil. I mean, there's been palm oil prices have been increased this week by about 4%, and we have Presco and we have Okumo oil. So I think for palm oil, we should be looking at that.
Okay, let's leave it at that for today. Thank you very much. Opeyemi Oguntade, analyst at Financial Derivatives Company, the data provider for the segment of the show, Commodities Market Report.